Hello everyone, I'm Riya Matthew and welcome back to DBFS Finvestmentor. Have you ever asked yourself the question found in the thumbnail of this video? I'm sure most of you will be confused as ELSS creates only two sparks within the brain cells of most investors, a lower lock-in period and the possibility to create ample wealth. Do you think selecting ELSS funds only by looking at the lock-in period or returns is the right way to do it? Certainly not. Sticking on to one or two criteria alone is not a proper way to approach ELSS. Moreover, deciding something important in your life without considering the A to Z elements is pure foolishness. So to prevent you from making any mistakes, today's video is all about the factors to consider while investing in such funds. By the end of this video, I'm sure you'll be well informed enough to take wise decisions regarding your ELSS funds. Assets under management or AUM. This factor is the first and foremost you should look out for before finalizing ELSS funds. Now let us understand the definition of AUM. As the name indicates, assets under management means the total market value of the investments held by a financial entity in favor of its clients. So can we say that it is an important parameter to judge or evaluate the success factor of a fund? Yes, and this is because it represents the size of this fund. So you can conclude that a larger AUM means greater performance and popularity of the fund, thus attracting investors and subsequently creating larger investments. So AUM is one of the factors you should consider to get an idea about the participation rate from investors or the success level of a fund. The portfolio turnover ratio. Now the second factor we are going to discuss is the portfolio turnover ratio. This ratio represents the number of times the assets or stocks within a portfolio are bought and sold by the portfolio managers. This ratio is important for ELSS funds. A higher portfolio ratio results in an increase in transaction costs. That is, frequent churning, or in other words, buying and selling can increase the expenses, thus affecting the fund returns. Portfolio concentration. Diversification is an important keyword for investors. If you're a regular viewer of our channel, you must know the number of times we have discussed diversification and its necessity in multiple scenarios. As the name suggests, portfolio concentration refers to concentrating on a particular sector, theme, stocks, etc. This can create risks since one cannot guarantee the volatility of these elements. Therefore, it is always better to go for portfolio diversification. Here you can distribute or spread your risk by investing in diverse stocks, themes and sectors, thereby making your portfolio less dependent on a particular entity. Finally, the expense ratio. The expense ratio denotes the annual fee charged for maintaining your funds. Therefore, it is a combination of management fees, administration costs, costs for advertising, etc. These expenses are usually taken from the total revenue guaranteed by the fund. Thus, a higher expense ratio can impact your returns. So consider the expense ratio part very carefully. I hope you must have understood the significance of these factors and how much they can contribute towards the success or failure of your ELSS funds. Your risk tolerance capacity also has a huge relevance. So make decisions wisely, consider your financial capability and goals without blindly following others. Do check out the other videos we have done on ELSS. The link is in the description box. Thank you.